Welcome to Key Points for December. Now this month, our take on the very welcome news around vaccinations. We look at the challenges that still face the global economy in the months ahead, and our take on the move higher in risk assets and whether now all the good news is priced in or not. Now turning to our first point, those of you who watched the video last month may remember that we were expecting some good news around vaccinations. Well, that's exactly what we've had, even surprising us in terms of the efficacy rates that are now being reported. Truly spectacular. One must remember, of course, that we were not expecting to see mass vaccinations being fully deployed until the middle of next year, so still some time out yet. But there is no doubt this is giving a lot of cause for optimism. Companies, households, investors are able to start planning their future. They're planning investment, they're planning spending for the coming year. And of course, this is very welcome. Now, while there's still difficult months ahead, we wouldn't be surprised to see some significant economic surprises in the second half of the coming year, given the pent-up demand that is here. And to gauge that demand, we're looking at some of the fast-moving, high-frequency data sources that we look at, such as hotel reservations, flight bookings, to gauge how strong that is likely to be, and importantly, whether it continues to build as the year progresses. So we're certainly encouraged by all of that. Now, looking at the more immediate future, there's no doubt the economy still faces many challenges. We're in the midst of the second wave of infections here in Europe and in the United States. And as economies perhaps open up again for the holiday period and the start of the new year, there's a good chance that by the time we get into January and February, we get a third wave as these long, cold, dark winter months hit in the Northern Hemisphere. And because of that, this is why it's so important that we get continued stimulus, additional stimulus coming through from the ECB, hopefully on the 10th of December, although there's some challenges being made by Hungary and Poland around the construct of the recovery fund, but it's very much needed and we certainly hope that's not derailed. In the US as well, we need to see additional funding being provided. And while we've got now clarity finally on the US election outcome, of course, we've got a very divided Congress, and the likelihood is that what stimulus is forthcoming is going to be very much diminished in what was being spoken about only a few weeks ago. So we still need that support mechanism to kick in to keep the momentum of recovery intact. Now, turning to financial markets. There's no doubt that the month of November has been one of the strongest on record for equity markets, as a lot of the uncertainty was dissipated and good news was factored in. Money was moved from the sidelines and was being deployed into the equity markets. Now, a lot of that is now being placed, and we suspect that actually there's still some room for profit taking, perhaps rejigging of portfolios towards year end, but the direction of travel we still think for equities and credit is higher, certainly over the course of the coming year. So we still believe that there is an upside potential, but there could be a little bit of volatility, some profit taking in the weeks ahead into year end. Remember, this full report and all our other publications, as always, can be accessed and read on zurich.com/MSME.